Today, we saw the NASDAQ closing with a candle of indecision, but could the next rate cut be the least justified in modern history? We also see AMD to lay off 4% of its workforce, about 1,000 employees, at a time when the Fed keeps saying the labor market is strong, nothing to worry about. Come on in, the water is warm. We come over and look at the fear and greed index. We are sitting at 68, well within greed territory. And like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. Now, today at 8:30 a.m., we had the CPI data coming out, and essentially we came in right in line with forecast. However, we do not see the CPI data still going lower. We can see year over year, we came in at 2.6 versus the last time at 2.4. And the last time I checked, 2.6 is greater than 2.4. So why do they keep feeding us all these lies? We come over and we look at what was the driving factor to actually pushing the CPI numbers a little bit lower. And it was essentially crude oil out there, followed by used cars and trucks and apparels. Now, if tensions would have ratcheted up in the Middle East, what do you think would have happened with crude oil, and just how bad would that CPI report have looked? Now, we come over and look at the Fed watch tool. Keep in mind, only 34 days left until the next FOMC meeting, and the market is priced in at 82% chance the Fed is going to cut rates by 25 basis points. However, hold up, not so quick. This article from Market Watch says the next Fed rate cut could be the least justified one in modern history. And if we go on to look right here, we see 1995 S&P 500 had a net change of 22.7 for 12 months with a forward PE of 11.7. But I want you guys just to scroll through as we look at some of these numbers and actually look at where we are right now. As of November 7th, 35.8% gain in the S&P 500 with a forward PE of 22. So think about this. The Fed cuts rates. That's going to pour more fuel on the fire. The stock market's going to rally even higher. Could that also be inflationary moving forward? Let me know your thoughts in the comment section down below. Now, we look at how the indices fared across the board. The Dow was up 47 points. The NASDAQ was down 50 points. S&P 500 up 1.39. Russell 2000 down 2.35. We look at advancing issues versus declining. We had 60% of issues declining on the day. Then as we come over and look at the sectors out there leading was consumer cyclicals, followed by real estate, then energy. Now, didn't we just say that energy was one of the driving factors that made CPI actually report better than what it actually was? And we come over, we actually look at a chart of crude oil. Crude oil is sitting right here near the bottom of this lower consolidation area, and we actually formed a doji candle. So are we going to see crude oil start to bounce from this area? Now, if we start taking out the high of today's candle, then I would look for crude oil maybe up towards 70.91, and just maybe we'll see more tensions ratchet up in the Middle East. However, since the presidential elections, I think Iran is kind of rethinking if they want to go tit for tat with Israel any longer. Next, we come over and we take a look at the dollar index, a rocket ship on the way up. And we got to ask ourselves this question. Could this be a larger ABC pattern that takes the dollar all the way up to 107.83? Now, it's not only the dollar on the move up higher, but also take a look at the 10-year yield. 10-year yield almost at 4.5% again. That is going to be a problem for the market. As yields rise, it's going to make financing any purchases a lot more expensive. So think credit cards, think houses, think car loans. And if those markets start to shrink, that overall is not going to be a good look for our economy. Now, since we have yields going up and the dollar going up, take a look at gold. Gold suffering another down day today, down 24 points on the session. And it's looking more and more like gold may want to make it down towards this high volume area at about 2,546. However, be mindful, we could start to see a bounce at any moment. The MACD indicator on the daily chart is not showing that at this moment, but it's something we want to be aware of that could take place at any moment. Then we come over and look at the volatility index today. The volatility index was down 4.69%. And we look at the VIX on the 5-minute chart. Notice we made it down into the 13s. We're down at about 13.77 before just barely regaining 14. Now, when we zoom this out on the daily chart, notice right where we are now, we're getting into those lower levels, which could be a danger out here for the bulls. And what I mean by that is we could see a volatility spike at any moment when we're down at those lower levels. Now, when we come over and take a look at Apple, we see basically a candle of indecision, wick on the top, wick on the bottom. However, it wasn't that way throughout the whole day. Earlier on, we were rallying up, and then later in the day, we saw Apple start to pull back here just a bit, while NVIDIA looks like it's still working on trying to come down and fill the gap at about 145.27. Speaking of gaps, Tesla still has not filled that gap. And I did close out my Tesla short, I believe, yesterday. I almost re-engaged on the short this morning. I just barely missed being filled by about 3 cents on that trade. But when we look at Tesla out here on the daily chart, notice we're almost at filling that one gap. Are we in jeopardy of coming down towards gap support out here from the presidential election? Let me know your thoughts in the comment section down below. And if you don't want to miss the next time I go live, make sure you're subscribed and the bell notification turned on for all. Now, looking at Bitcoin today, oh my goodness, Bitcoin was a rocket ship out here. Bitcoin hitting 93,483. And essentially we did a look above. We don't like it up there. Air's a little bit too thin. We come right back down, and we're going to see, will this be the turning point for Bitcoin, or is Bitcoin going to be able to hit our ABC projection at 108,945? Now, I want to bring it to your guys' attention. There is no published 80% sale with Apex Trader Funding at this moment. But if you use the link in the description box down below and use promo code Mike at checkout, I've been told that 80% discount is still being applied. Now, we come over and look at the Russell 2000 real quick. We see Russell 2000 suffered a down day out here today. However, that was not always the case. Look at this morning, right out the gate, Russell 2000 pops up, pulls back a little bit, then rallies back up and is unable to make a new high, ends up forming a lower high, and then down we go. And we talked about this during the live stream. Could the Russell 2000 be giving us a playbook for the other indices to start tumbling lower throughout the day? That's exactly what actually transpired. If we look at the Dow also started to pull back this afternoon. However, the Dow was still able to close in the green. Now we look at the Dow on the daily chart. Notice this gap support is not out of question, along with a retest of this recent swing high that we had right over here at about 433.01. Then as we come over and we look at the QQQs, notice 2 hanging man candles. Then today we close with a candle of indecision. Then out here on the 4-hour chart, look, the MACD indicator looks like it may want to roll over. And I do think in the near future, this first gap gets filled at 505.70. However, on the 30-minute chart, notice MACD indicator is near the zero line. We've had that strong push up. Now we've had an upper level consolidation, which could be nothing more than a recharge point for another leg higher in this market. So if you're looking to be ultra bearish this market, be very, very mindful. With the MACD back down towards the zero line, that could be nothing more than a recharge point, and you might get your face ripped off if the bulls come back, trying to push the NASDAQ back towards all-time highs. Now, if we do go above all-time highs, will this be a look above, failure, and then we start coming down and filling some of these gaps? Because as we come over and we look at the futures markets real quick, look on the 4-hour chart. We've had that big push up and we have this upper level consolidation. Now I'm still looking for lower prices. However, could we be getting ready to make another run towards all-time highs? We look over here at the 30-minute volume profiles and notice we barely missed breaking the low from the prior day out here this morning. However, later in the afternoon, we made it above the high from the prior day. And one of the targets we were talking about on the live stream was coming back towards this afternoon value area high at 21,174.50. We overshot that. The market was an overachiever, actually hit the point of control and almost made it down towards value area low. Now look at the volume profile levels. We have value area high at about 21,198.50. We have the point of control about 21,164. The value area low would be 21,108.00. Now tonight, since we're closing right within value, which way are we likely to break? And I want to wait and see, let the market prove to me. If it wants to go above value area high, I'm going to be looking for the market to come back and re-auction this minus development area on the profile. And I really like this node right here, somewhere in the ballpark of about 21,249. Now, if the market is going to go tomorrow, going to push up towards some of those levels, keep in mind, we do have news starting at 8:30 tomorrow morning. We have the weekly unemployment claims. We have PPI coming out. Then at 3 p.m., we have Powell speaking as well. However, I don't think Powell is going to be a huge market moving event tomorrow. From last week till this week, is there really anything different that's going to be learned within his messaging? I just simply don't think that's going to be the case. Now, we look at the SPY out here on the daily chart. What do we have? Basically, upper level consolidation. The bears cannot take control and get a pullback. The bulls are not letting them take hold. We look on the 4-hour chart. MACD is looking a little bit weak, like it may want to start to turn. 1-hour chart, we're almost down towards the zero line, but 30-minute chart, we have that upper level. We have that big push, upper level consolidation. MACD indicator flattened out by the zero line. Watch out, that could be nothing more than a recharge point for another leg higher. So this is either going to be accumulation to go higher, or maybe we're starting to see some signs of distribution and we're about to go lower in this market. We come over and look at the futures markets real quick. What do we see? Well, out here on the 4-hour chart, big push up, upper level consolidation. Now, at some point, We will come back and probably refill in this part of the profile. However, is it going to be this week? Could it be as soon as tomorrow? Or are we going to save it for a later date? Coming over here and look at the profiles real quick. Notice value area high is going to be 6,026.25. The point of control will be 6,015.75. Value area low is going to be 6,005.25. Now, if we can break above value area high, then I do want to try to retarget near the highs from today, near these candle bodies, somewhere in the ballpark of 6,034. Anything above that, it kind of makes sense to sit there and hold on and see, can we make a push all the way back over here and make another new all-time high in this market? Now, if we start breaking below value area low, I would want to retarget the lows from the prior day. Then we'll see if we can start to have further declining from that area. One of those areas could be 59.34 which is an untested point of control left behind for several days back. And at some point, that level is going to be taken out. We just don't know when. So we want to see, all right, when are we violating value area low? Now, another way we can target that value area low would be if we break above value area high, then we start coming back down. Then we can target the point of control. We can target value area low. We can target the lows of the session either today or the prior day, and then try to hold a runner all the way down towards that point of control. Now, if you want to see how I lost over $2 million in 2 days trading the futures markets, watch this video right here.